I found something very interesting in the COT report this week that I wanted to share with you guys. If you've been watching the channel, you know I've been watching the Japanese yen quite a bit and that I have a bullish position on the Japanese yen via my short on CHF JPY. And of course, my long position on TLT, which has a positive correlation to the yen. In fact, just for reference, we can show you the JXY versus, we'll compare it to the TLT, which is a bond ETF, both kind of serving that risk off kind of asset, if you will. But I wanted to show you something I found in the COT data, which I thought was really interesting. So for long-term viewers of the channel, you know we watch this all the time. The commitment of traders data helps us to watch what institutional money is doing on a week-to-week basis, what they're buying, what they're selling. Well, we're going to see here in just a second that the Japanese yen was heavily bought this past week. And in a second, we'll take a look at the COT data history to see if there's some trends here that we could potentially pick up on. But I want to show you first the net positioning. This has changed drastically, and usually this changes very short or over a very long period of time. And just we see gradual accumulation or distribution from institutional money on key currencies, indices, commodities, etc. Well, the Japanese yen has gone from the far left-hand corner all the way to where it sits right here. What that shows you is that the short percentage has drastically changed on the Japanese yen currency. In fact, now institutional money has a 69% nice long percentage in terms of their positioning. So they're very long now where they used to be short. And I find this to be very, very interesting because what we see happening is essentially a shift more towards a risk-off currency play. Now, we also see, if we scroll down to the latest commitment of traders, buys and sells, this table will show you a heat map of where the biggest buying and selling went on in the market in terms of the contracts traded by non-commercials in the commitment of traders report. So big money really took a big position in the Japanese yen in the last few months. This is pretty substantial. If we take a look here, we can see the change in long contracts week over week. They added a significant amount of longs, and at the same time, they decreased pretty drastically their net short exposure. So if you think about this from your own, like picture you have a trading account, and in your trading account, you essentially closed out any any shorts that you had on the yen, and you added a whole bunch of longs. But this is the aggregate stuff for a lot of institutional money in the financial markets. So big money, long story short, picked up more yen bullish positioning. And that was on a week where we've starting to see the yen pick up momentum. I mean, if you take a look at a lot of different currency pairs, here's dollar yen trending down here on the daily, euro yen looking very weak. And remember, guys, what a lot of traders forget is that institutional money a lot of times is actually riding trends. They're not trying to call the top and bottom, which is, again, kind of more of a retail phenomenon. When we take a look at this, what we can see is institutional money, when we look at the historical chart, which is important here, they're accumulating US dollar, and we can also see they're accumulating yen. So this is really interesting. Take a look here. You can see a accumulation of the Japanese yen in recent times. I think this is very worth noting and keeping an eye on. They're buying into a risk-off currency pretty aggressively. Now, we've talked about this on the channel quite a bit. Pulling up the Japanese heat map, it makes a lot of sense. There is some pretty strong numbers coming out of Japan compared to forecasts. GDP growth is strong. We see PPI is hot, and then we also have interest or inflation numbers coming in higher than expected. So perhaps big money is kind of sniffing out, oh, the Bank of Japan is going to hike rates. And if they hike rates, meanwhile, every other country in the West seems to be looking to cut rates, that poses a serious risk to markets and also potentially gives the yen a lot of upside. So I remain bullish on the yen. I've been in some positions. I have a TLT position, which is going quite well. I can pull that up here just to show you, which is for me the way to express my bullishness on this idea the best. I like trading TLT quite a bit. So I have a good sized position and a profitable trade running on this one. And I do think that this and the yen can continue to strengthen if we see a little bit of more risk off flow coming into this market. I thought this was worth sharing with everybody. If you don't have a copy of the Edge Finder, you'd like all this data so you can take a look at it in depth each week. I don't do these types of videos every week, but I thought this was worth mentioning. If you'd like to do this on your own time, you can get a copy of the Edge Finder down below in the description. And if you use promo code YTVIP, it will give you a nice discount on the product in the description. So all the information is there if you'd like to pick up a copy. But yeah, just thought this was worth mentioning. I mean, Japanese yen currency getting accumulated pretty aggressively is something very interesting out there. Like I said, I am long TLT. This is a very closely correlated idea to being long the yen. I also have a short position on CHF JPY. So, we've got a little bit of breakout here in momentum. And I think that, my comment section this past week has been a landmine, or a minefield, I suppose, which makes sense. There's a lot of politics going on. There's a lot of crazy stuff happening on the White House on Friday, and people were actually, there was a couple of people in my comment section teasing me for being cautious on this market because we had a big bounce back on Friday. Look, could we have bottomed out in the stock market? Possibly. But I'm seeing a lot of reasons right now that I think it's very, very appropriate to stay cautious at this time, and perhaps a bigger risk-off move is coming. I mean, I think that you take a look at the stock market and you say, look, it's had a 2-year stretch, of which I have been bullish the entire time, right? Pretty much. I don't think I've had any windows where I'm just straight up bearish on the market. So I'm not calling for, a crash or anything like that, but we've had a really good run. People have forgotten what it's like to see risk-off moves, and I think that we might be on the cusp of actually seeing one. So I don't think the market's going to crash per se, but I would not be surprised if, with trade war concerns, the Bank of Japan looking to hike rates, inflation still sticky, that we do see some larger pullbacks in the market, of which I'd be looking to be a buyer. I'm just saying that I think that, markets are kind of conditioned right now to think every single dip gets bought aggressively. And while, in the long term, buying the dip is a smart idea, you sometimes can get some much larger dips if you're patient. And I think that, in 2022, you had a massive sell-off, 27% or so on the S&P 500. I just think people have kind of forgotten that can happen, and that back in 2018, when Trump was going through a trade war with China, the stock market itself, we've covered on the channel, dropped at one point by about 21%. So I think that where we sit at just a pullback of about 5% has the potential to become something more, maybe turn into a 10% pullback or so. But we'll see. I mean, at the end of the day, I do want to also make this point very clear. I am not trying to, call the future per se. I just think that there's a lot of risk in this market right now. You have to be cautious, in my view. But if we start to see, good news come out of the headlines, and perhaps, some cooling of that Japanese yen buying, and we start to see this kind of price action on the S&P 500, then I have no problem just saying, oh, maybe I was wrong, looking to get bullish again. I've missed out on most of this sell-off, which has been great. But if we start to see this market rebound very, very strongly, then I'll probably look to still be a buyer. I think it's really important, and this is a note to anybody who finds themselves kind of browsing YouTube or Twitter, and you'll notice that there's a lot of people who kind of have their book. They talk their book, if you will. There's people who are perma bears. There's people who are perma bulls. I do my best to remain kind of somewhere on the cautiously bullish side forever, right? So whenever I'm looking at the stock market or gold, right, I am long-term bullish both of those things. But I do have to keep an open mind to the idea that markets don't go up forever. There are times where things are troubling to the markets and there's bigger corrections and sell-offs. So I kind of take a perspective of, when you get good reasoning, there may be reasons to be short-term bearish, but I'm not a perma bear. I'm never going to be a perma bear because, again, stocks grow over time, economies grow over time, and I'm optimistic that is the case for the future. So there is a little bit of a pick your way of viewing markets. Some people are very skeptical of stock markets. They're much more bearish, and there's a place for that. I mean, there's reason to be skeptical of certain companies, like you know, just many examples of sketchy stuff that happens in the markets as well. Anyways, I hope this was helpful to you. I just wanted to point that out with the Japanese yen. If you are interested in getting a copy of the Edge Finder, again, like I said, you get access to our heat maps, the COT data, all of that. And I'll leave a link in the description if you made it to the very end of the video. That promo code for a short while will give you an extra discount to people who are watching this video right now and took some time out of their Saturday to take a look at charts with me. Thank you very much for watching. Have a great rest of your day.